Hi, I'm Jan Lee, and I'm a Texas real estate broker associate here in Austin metro area. At the time of this recording, the interest rates for home loans are at an all-time low, anywhere between 2.99 to 3.5%, and it is projected to increase in 2021 and beyond. At the end of this video, you'll gain a better understanding of why investors and buyers alike are taking advantage of the low interest rates, and in some cases are actually competing and overpaying to buy a home in this climate. So today we will be talking about the effects of a higher interest rate on your mortgage payment as well as your finances. Just note that the figures I have used here are for demonstration purposes only. Property taxes vary by location. Contact your lender for a more accurate estimate specific to your situation. So let's begin. Now, when you buy your own home, you will have a mortgage. And a mortgage is consisting of principal, interest, taxes, and insurance. Principal is the amount of the monies that goes towards paying down your loan. Interest is going towards the lender fees for letting you borrow the money. And then taxes for property taxes, and insurance is for homeowners or hazard insurance. Now, let's assume in this example that the list price is $350,000. They price it properly, so the buyer is actually offering the full price at $350,000. And let's say the buyer has been approved for an FHA of 3.5% down, meaning the buyer will have a down payment of $12,250. And if you deduct that amount from the list price or the purchase price, you will be borrowing $337,750. Let's assume that the current interest rate that was offered to the buyer is at 3.3%. And so here the monthly payment would be around $1,479.19 for principal and interest. Now, if you add the taxes into the equation, assuming that in that area it's a 3% tax rate, the buyer will be paying around $875 of that mortgage amount towards taxes that goes into the escrow account, and then 0.05% is estimated for the homeowner's insurance. So if we break this down, right, the estimated monthly payment based on this situation is about $2,500. Now, if we break it down, let's say that the first payment is going to be in May 2021. This is the loan amount after the down payment. As you can see, $928.81 goes towards paying the interest rate, and then $550 goes towards your principal, and then estimated property taxes that is escrowed $875, and of course your homeowner's insurance. Now, at the end of, let's say, 5 years, okay, the amount of the money that you owed is going to be lower because you keep on paying it every month. And then also your interest rate or interest payment goes down because it is calculated based on how much you owe. And as you can tell here, the principal goes up. So meaning there's gonna be a lot more monies allocated towards paying down your debt. So in this example, at the end of 5 years, they're gonna be owing $302,000. Okay. Now, let's assume that the interest rate went up. So everything is the same information, only the interest rate goes up. As you can see here, the monthly payment also goes up. And if we break it down, the same start date, the same start loan amount, $1,407.29 actually goes towards interest, and then principal is $405.82. So at the end of 5 years, as you can see, because there was more being paid to the interest rate rather than your principal, you will still actually owe more. So in this example, they still owe about $310,000 on that home. So I hope that you've learned something today. And if you have any questions, please let me know. My email is janlee@kw.com. That is janlee@kw.com. Or you can text me at 512-999-4460. And it doesn't matter if you are not from the state of Texas, because I can find you a team from our network that can actually help you in purchasing your home. So again, I hope that you learned something today, and until next time, thanks. Bye.